Most real estate data looks backwards. Sales prices, inventory, days on market is useful for history, but if you're actually in the market or thinking about it, the information can feel pretty late. It tells you where the market was, but not where it is, not where it's going. So let me share one statistic nobody talks about. You can't find this on Zillow or Realtor.com. It tells you what's happening right now, and it matters whether you're buying or selling. I'm talking about showings. Back in 2022, when interest rates shot up faster than they ever have in 30 years, something important happened. Showings began to fall. And they didn't just dip, they declined month after month after month for years. That was until March of 2025. So take a look at this. So look at the average showings per day. And what you'll see is a huge drop off starting in 2022. It declines year after year after that. You'll see the blue line though is last year. It started passing the previous years early in the year. And then in the fall, actually broke out above all the years. And here in January, you can see it's starting much higher. Naturally, the big question followed. Has the market begun to shift? Has the Knoxville buyer returned to the market? Well, not so fast. There's another layer to this data, and it's one that actually matters. So while showings have been rising, inventory has risen at a much faster pace and for the entire 4-year period. Buyers just simply have way more options, so they're looking at way more houses, and that's why showings have gone up so much. The real question isn't how many showings are happening, it's this. How many showings is each home actually getting? That's where the signal lies. Showings per listing tells us 3 critical things. When buyers are truly returning to the market, when sellers have the best possible time to list their homes, and when buyers are going to have the most leverage. And here's what the data says. Even though total showings began rising in March of 2025, inventory was still increasing faster. It wasn't until October that showings per listing actually outperformed the prior year. So take a look at this. So this is average showings per listing. And what you can see is for the entire last 4-year period, showings per listing was substantially down. And of course, this includes inventory. So we don't see this breakout, even though showings increased way earlier last year, we don't see showings per listing increase until late in the fall. After nearly 4 years of fewer eyes on each home, the average listing finally began seeing more buyers. And that trend didn't stop. We've now seen 4 consecutive months of increasing showings per listing. Last month, up 22% year over year, despite the bad weather we had at the end of the month. This is an early signal, not a headline and not a guarantee, but it is the kind of shift markets make before prices start responding. More showings per home lead to more competition. More competition puts upward pressure on prices, and especially after prices have been stagnant for the last 6 months or so. That said, this trend is still fragile. It reacts quickly to economic news and interest rates, which brings us to timing. And one of the biggest misconceptions in real estate. Most people assume summer is the best time to sell. The data doesn't say that. The peak window for sellers is actually March, when showings per listing are the highest, before inventory surges, and that's closely followed by February and April. For buyers, the advantage flips. Showings per listing fall in late summer and hit their lowest point in December. Translation, if you want leverage as a buyer and fewer competing buyers, look for homes still on the market during the holidays. Markets don't turn suddenly. They drift and sway before they turn. And right now, this is a drift worth watching. If you want to understand what this trend really means specifically for your price range and your neighborhood, just reply to this email.